trade reviews, or you want us to talk a little bit about the condition of the markets and why exactly I started or mentioned in my announcement that today will be a little bit choppy or difficult? Because I really expected to have a red day today, and I knew that this day will not be the best for me. I just get used to these kind of days when they happen, and I know they are not the best and they're not clean enough. Okay, so we'll start with that. Okay, I will share my trades. By the way, guys, today I'm down 3 hours. It's a red day, nothing bad about that. I am green Monday, Tuesday, Wednesday. Today's red, and hopefully tomorrow will be green. Usually I aim per week to get at least 5 hours. On my best weeks, I'm having somewhere around 10 hours. I mean, not best, but the good weeks, because I aim per month to get 20 to 40 hours. I was up 9 hours this week. After today, I'm up only 6 hours for the week. If tomorrow is red, I'll be up only 3, which is not close to my goal. And if tomorrow is green, I'll be up somewhere around 9 to 10, which is my ideal weekly goal. We'll see how it goes. So again, let's talk a little bit about the market, okay? And why it was a little bit choppy right there. Zoom, CGC, why is this not linked? Cool. This is linked now. Awesome. So this is what I was thinking about. Usually when you're having huge sell-off days, like we had yesterday, stocks need to rest, right? Or they need to pull back, or they need to consolidate a little bit. Sometimes they just immediately continue dropping down, right? And if you take a look, for example, at Zoom, last 2 days, huge drops, right? Yesterday was also a huge drop on it. If we take a look at NIO, there were huge drops like last few days. And I knew that today, looking at the charts and looking at my style of trading, I'll be looking for a continuation. If the daily chart is weak and the 60-minute chart is weak, I personally will not be looking for a long, because it could open just a little bit up and then drop, maybe a little bit more and drop. Maybe it will go a little bit up given ABCD pattern with a fake breakout and then drop. So basically the long setup around here is not something which I would be normally looking at. I know that there might be a short squeeze because of the 2 red days. Now, after 2 red days, another thing which could happen, not only 2 red days, like big sell-off days, another thing which could happen is opening with a breakdown with an immediate squeeze as fake breakdown, right? And then it will go a little bit to the upside. And again, it will not be also a long. It then is going to drop down. So in this case, it will be chopped to the downside and it will be chopped also to the upside. Knowing this, I knew that, okay, the open will be a little bit difficult. I'm short buys on this thing around here, and I really want to short it. But if I short it, as my plan tells me, I might just get sold out. If it goes up, then it will go up without me, and I'll have to wait for it to break down, to go down. And in this case, look at this. It dropped down 1, 2, 3, and now these are 3 consecutive candles. And I usually don't take trades after 3 consecutive candles because I am waiting for a pullback, and it did the 4th and the 5th. And look after that, people will be looking for an ABCD pattern for a continuation to the long side, because the market opened so strong. But the market opened so strong on a week, daily, and bigger time frames. So looking for a continuation to the long side is horrible. Now, this is a huge drop around here. And after a huge drop, people will be looking for a reverse ABCD pattern or a continuation to the downside, right? And then what happens is it's coming back up. Now, people will be looking again for continuation to the long side, which also would be failing. Like days after huge sell-offs or days after huge runners, especially when it's whole market and not only 1 stock or 2 stocks, they tend to be a little bit choppy. And not only choppy, decision making is a little bit tough on them because they are not clear, right? For example, NCLH around here, if you just take a look, NCLH was actually clean in this one. I don't know. This one definitely missed really well. Anyway, I looked at it at a breakout above the $34. It did break in the pre-market. Market opens, it dropped down within the range, and I didn't want actually to short it because it could have just simply bounced out of here. But there was a nice breakout somewhere right there. Anyway, AAL looked so good, right, on the daily chart, but because the whole sell-off on the market, it just didn't do anything. It simply sold off. Same thing with Zoom. 2 days with selling offs or big days and sell-offs. Market opens decently strong. People might take it for an open range breakout. Then it drops down. Then it just sells off. So big, people will be looking for a reverse ABCD pattern and then it squeezes back up. So these days are really difficult to trade. And, my max loss for the day is somewhere around 4 hours. I didn't even hold it for the 4 hours. I just decided to stop out at 3 trades. Now not only that, today I also managed my trades bad. Not managed, I watched the wrong stocks. One of the stocks which I was looking at or was watching is TRIP. Why is that? Because I wanted to watch a stock for a break up, not a breakdown. Why not a breakdown? Because the whole market looked like it wants to break down, and I was watching stocks for a breakdown, but I knew that those could squeeze first, and I needed something else which could also open strong with the strong uptrend on the bigger time frames. And the only thing I had was TRIP, but TRIP yesterday it was choppy. And on the daily chart, what are those candlestick, guys? Remember those on the candlestick pattern webinar? What do we have around here? One of the bearish candlestick patterns. Actually, there are a lot of answers to this one, but we could have all of them together and combine them. Okay, so piercing line, not exactly. Okay, there is a tweezer top, I agree. There is a doji, there is a shooting star, and there is also the shrinking candles, right? You could see that the more we go up, the smaller the candles. The more we go up, the smaller the candles. And this pattern around here is an indication that stock could start finally pulling back before a continuation. I saw this on the daily chart, but because I literally had nothing else to watch for a breakout to the upside, I decided to give this thing a try out there. So it sells off, it comes back up. I'm taking it for a momentum play to the long side, having my stop loss closer to here, and it gets me out literally to the penny. Bad stop loss, really tight. Now the second entry was decent because at least on the second entry, we literally broke up and we broke the pre-market high, and I'm taking it to the long side again. Low of the candle as my stop loss for momentum play, gets me out, and I'm down 2 hours on this thing. I tried to take a parabolic reversal, which was not ideal on X. It wasn't the worst, but it wasn't ideal. Why is that? Remember, on parabolic reversals, you want to have 3 consecutive candles below the 9 EMA. So I combined this 1, 2, 3, and I took it after reversal candle to the long side, get stopped out. That was bad because this wasn't 3 candles. On parabolic reversals, you want to start below the 9 EMA. So this is the first, this is the second, then again, it makes a new candle, a new high. So this is not a good parabolic reversal. Then this is the first, this is the second, this is the third, and around here, you can watch for a parabolic reversal. And if you're having a reversal candle at the low of the day, which we had, you could try it to the long side and target all the way up. So this trade around here was bad. It was bad managed. Going through my rules for a parabolic reversal, this was not good. I shouldn't have taken it. And this was just simply an extra minus R loser. TRIP, looking at the daily chart, I knew it was weak. I shouldn't have watched it, but again, I lost on it. I know that the market was difficult, as I told you, but still, those losers shouldn't have been there. And if I lost, I should have lost on some other setups. So today, it's not the market's fault, it's my fault. As we were just discussing, the market itself also at the open could have been choppy based on what we see around here. So if you are having huge sell-off days, 1 or 2 days, or maybe 3 days, expect that the market will start with a short squeeze. You could trade that squeeze to the long side, but don't aim for a continuation. If it starts dropping down, either you get your entry on the first or on the second candle and then write it down, but don't chase it all the way down, and don't try to force reverse ABCD patterns after huge drops. And you could see that around here we dropped where from 40 to 50 to 38, and that's basically the average true range, even bigger than the average true range. You can't aim for a reverse ABCD pattern of this thing after it did the average true range move. And now it will just simply be chopping around this range throughout the day, or at least that's what I'm expecting. That was unlucky, Chris, yeah. I really want me to open range breakout. Yeah, I have a few members also who caught that, tried 1 minute open range breakout on Trip, and at least there was one loser for you, Bobby, which is good. So that's it. Now let's take a look at your trades. So twin traders, you traded a UAL. Let's take a look at this. So you tried this thing for a short, right? Now UAL, look at this on the daily chart on UAL. And this is something we mentioned in the webinar. If you're having stocks which are showing you, for example, strength in the daily chart, you might not want to take it intraday for a reverse ABCD pattern. Why is that? Because on the daily, it's setting up for an ABCD pattern, and it could simply bounce at any area, continue consolidating before the breakouts. This is the first thing. The next thing, look at the size of this candle. This is its move today. And looking at the average size on those, this is basically the average to range on UAL. So you try to catch a reverse ABCD pattern on UAL after it already did its average true range move on or against the direction of the daily chart. This is something I would have avoided. You took it to the short side with a really tight stop. Again, that should have been the stop loss around here, right? Then you re-entered, and this stop loss is not, it's not fine actually. This again tight. It should have been at least the middle of the range, because now you're having 4 candles, and that's sort of a range. If you're taking it at the break of the range, stop loss in the middle of the range, and then aim for 2 to 1. So 2 mistakes around here, 2 tight stop losses. This is the first thing. Second thing, going against the direction of the daily, against or for a move after it did the average true range. The next thing around here is that this was a parabolic pullback. What is a parabolic pullback? A parabolic pullback is a pullback which happens after a parabolic move. That was our parabolic move. That is the climactic reversal around here, or increasing volume. That's the parabolic reversal into the 9 EMA. And on those who are waiting for what? A W shape. If it drops like this, you don't take it to the short, you wait for the W shape. Or you wait for what it did around here, a range, and then a short around here. Nadia, let's see what you traded. So Nadia traded Bingo. Bingo was good short, definitely, and I like that. Look at this. Daily chart is selling off, so we are short biased, right? The 15-minute chart telling us basically nothing, right? It's just chopping around, and this is what happened. First of all, a fake breakdown. You see this? This is exactly what I told you. So after huge sell-offs, what could happen? Fake breakdown. People will be taking it to the short side only to get stopped out. Then they'll be taking it to the long side around here for an ABCD pattern. Guys, can you hear me? Was it only Nadia who lost the sound, or you all? Okay, cool. Awesome. So look at this. This is exactly what we said. This around here could be a fake breakdown, and then it will squeeze back. People will be looking for an ABCD pattern. They'll be taking it to the long side only to sell off one more time. I like what Nadia did, though. What Nadia did was really smart. This pattern around here is what? Come on, what's this candlestick pattern? It's not hanging man. Hanging man is a hammer at the end of the day. Evening star, exactly, Sam. So remember, what places do we love this candlestick pattern? We love the evening star on a stock which gaps down, then it fills the gap. Remember, we mentioned this in the webinar. Then it fills the gap, didn't fill it fully, but filled enough of it, and then it gives us that pattern. This pattern is really good for a continuation on the daily chart, right? So what happens around here? It's going up. It's going against the direction of the daily, and it's going against the direction of the 60, and this is what we expected at the beginning to happen. A short squeeze because the huge sell-off day on the previous day, and then took it to the short side at the best place possible. Now, that was really smart, Nadia, and I like this entry. It was 5 p.m. Yeah, Chris, the webinar is recorded. You can check it. There is also a PDF file with all the slides if you want to just go through them. So Nadia, that was an awesome entry. I'm really happy you didn't get squeezed here, and you didn't try it somewhere around here for continuation. You waited for the right place, for the right setup with the right direction. It requires really huge amount of patience. Wait, where did you flip it? Oh, you took it to the long side at the low of the day, right? Now, let's take a look at the 5-minute chart. Now, it's not bad, but you shouldn't have been stopped out because your entry was really good. Look at this. 1, 2, 3, 4, 5, 6 consecutive 5-minute candles at the low of the day. There is slightly increasing volume, A reversal candle, new high. Don't get scared by a small reverse ABCD pattern on the 1 minute chart. And in fact, I love when I see that there is a reverse ABCD pattern on the 1 minute chart forming against me after this big of a move, because this is a trap. A lot of people are looking for a continuation after huge moves. Anyone seeing this huge move are trying to be patient and trying to get in after the pullback. And getting in after a pullback on the 1 minute chart after this huge of a move on the 5 minute charts is the worst thing you could do. And this is even a confirmation for me that I could add the moment it fails that reverse ABCD pattern and move my stop loss after that higher. So your entry was awesome. Shouldn't have been scared right there. So Joe traded Apple, and let's take a look at Apple. So the 5 minute chart, you are having your range. The 60 minute chart, you went for the short squeeze. This is not my style, but this is decent still, right? Good range on the 5 minute chart. The 60 minute chart, you are sitting in the middle of the range. Took it to the long side for a 2 minute open range breakout, partial all the way up. Now look at this. This is exactly where you don't add to your position and you don't try to hold it for a trend. We know that short squeeze could happen, but short squeeze doesn't mean that it will just simply trend today. I mean, after looking at the 60, it's so weak. I will not really expect it to just V-reverse. It could V-reverse, but how often do we see V-reversals, right? Because of that, if you get your entry around here, put your stop loss around here, and you get your 2 or 3 Rs, be happy about it, exit, and stop trading. Don't add for a continuation against the trend. Your short, though, was awesome, right? Again, same thing. What's this pattern around here? This is the evening star. Earlier entry would have been better. This is exactly what Nadia did, and then went all the way down. Now, in this case, you can hold to your position, and you can add to your trades, right? You shorted partial, and then add on pullbacks and go for the bigger run, because at least now you are going with the overall trend, which is on the daily and which is on the 60, and you can expect it to sell off more. All right, Joe A traded NIO, and this is the same thing, right? Look at these guys. I like your patience, actually. You all did way better than me today, which is actually really good to say. I love it. So we're having, again, the evening star around there. You didn't catch it immediately at the high around here. Maybe you didn't like VWAP, you didn't like the moving averages, so you wanted to be a little bit patient. You waited for it to break VWAP, and you took it to the short side, which is really cool. Why is that? Because this is the second 5 minute candle. I wouldn't approve an entry around here on the third candle, because those are the worst, and usually stocks start pulling back after the third candle. But the second and the first are the best, especially if you're managing to get it at the beginning of the second candle. Really good entry. Stop loss somewhere in the middle. Because I'm afraid that it could pull back into the cross. Actually, the cross is here. Where is the 1 minute chart? And the cross is here. It's not bad. You could even tighten your stop loss a little bit. Now, partial all the way down. There is 3-bar play around here, and Joe added to his position. Is it bad? No, because his average is so far. And even with an add around here, he could keep his average somewhere up here, just in case. Nice partial, and now there is a setup around here, right? That is the morning star pattern. And this could indicate that there could be either pullback, either a reversal. I would go for a reverse, for a pullback, not a reversal, because now we're going with the direction of the daily and the direction of the bigger time frames. I would think that, okay, we might make a reverse ABCD pattern and drop down. I would not take that reverse ABCD pattern, because this around here already did the average through range move. Now, your last exit was nice, right? You see that this is actually a pullback pattern. Earlier would have been better the moment it made a new 5 minute high. In fact, the moment it did a new 1 minute high after that range, because this is a clear range. When the stock is extended, right? 1, 2, 3 candles. Now we're breaking the range. That's a good entry. That's a good stop loss in the middle of the range on the 1 minute chart, if you want to go for a parabolic reversal. Now, this is something I wouldn't have done around here, because those are multiple candles on the 5 minute chart. They are small, which is okay. If you had 3 like this, I would have definitely disagreed with this entry. But since they are small, I could assume that this is the first, this is the second candle, this is the third candle around here. Just combine them together. It's just that I'm afraid that it could make a new 5 minute low before continuation. That's what I would usually wait for. With an entry around here, I would put my stop loss at least around here, just in case it does the new 5 minute low, and then a continuation. But good job. 2 trades. 2 winners, both of them well managed. GG. Let's check this. So Gigi traded bingo, and this is the same thing, right? The short squeeze, there is a fake breakdown, right? Gigi, was this something which helped you make your decision? I'm not sure if Gigi here, but look at these guys. We said that fake breakdown. Yes, it is, right? Exactly. So it's first breaking down, and after the breakdown, it squeezes into the middle of the range. Once it goes into the middle of the range, you are no longer interested in a short, we're interested in a long. This long for me will not be for a trend. As we said, it will be for a scalp. So Gigi took his partial, added around here. I personally wouldn't have added, and then exited all up there, or most of his position. Yeah. Once it started dropping down, I'd have just simply bailed, because we know that the direction overall is to the downside. Don't give your winners back, just exit all at the highs once you're hitting the reward you aimed for. So well done, Gigi. Bobby traded MRVI. I didn't have this on my watch list. So those are 3 shorts, right? Now, those are not bad. I mean, look, I don't have the 60 on the daily around here, but looking at the 5-minute chart, it's not bad. Overall, there is a range around here. Here, it finally broke down. At the open, it's closing as hammer, engulfing it, and making a new 1-minute low, which is not bad. So you're taking to the short side for a bearish engulfing crack. Now, this is not literally a bearish engulfing crack because of this wick around here, but it's still a decent one. Took it to the short side and stop loss in the middle. In this case, I wouldn't have put my stop loss in the middle. I would have put my stop loss at the high. If this candle goes a little bit up and then it starts dropping down, I'll use the middle. If this candle opens and it starts dropping down immediately, I'd use the middle. And I think that's actually what happened this week. By the moment you had your stop loss wasn't there, right, Bobby? I think it opened, started going down, you took it to the short side. Yeah. So stop loss isn't bad. According to our setup, this is a good short. Oh, it went high first. So because it went high, I would have gave it a little bit more room, because this looks a little bit tight to me. I don't know how tight it is in comparison to the spread. I didn't see the spread, but still, it's fine. I like that you re-entered into this one. This was a clean re-entry, and you shouldn't have actually exited break-even. This is the case where I don't exit break-even. You managed to get your entry somewhere around the first 5-minute candle at the break, and there is no reason to exit. You could just make a lower high and then drop down. If it's forming a setup against you, then yeah, definitely you can exit at break-even. Now, you took your entry for a 3-bar play. Better wait for the 3-bar play for this candle to close, just to have the 3-bar play. That was around 9:48 or 9:46. This candle could have just simply closed like this, right? That's why we need to wait for the candles to close to confirmation, but I can see why you made this decision. It was clearly hugging the 9-moving average in the 1-minute chart. That's the stop loss. Nice partial, another partial just in case it's holding this level and starts to pull back at the break, and at the break, more partials. That's smart. The rest at break even. Now, if you had a lot of positions left right there, I would have exited most of the position around here. If it's small position and you aim for a reverse ABCD pattern, then it's fine. 8% is not too much. Okay, that's good. Really well done, Bobby. I like how you stick to your plan. Get stopped out once, shorted the second time, so that there is still an opportunity, shorted the third time, right? Yeah, 3 shorts. I thought you said 4, right? Or you said 3? 3, okay, that's cool. Amir, let's see this one. Now, sold off below view up before it came back and closed above view up. That's cool. Took it for a 1-minute open breakout. So guys, when we're sharing the charts, it's better to have multiple charts, because remember, the 1-minute chart and direction is not enough, right? We need to see the bigger picture as well. But basically, everything did the same thing today, which is fine. So it sold off, didn't break down, squeezed all the way back up, closed as a hammer, sitting at pre-market level, took it to the long side, added multiple times to its position. That would have been my stop loss maximum. Nice partials all the way up, and good exit at the double top, because we know that this thing could actually get back into the original direction, which is to the downside. Well done, Amir. Yeah, that was a nice hammer, OG. So C's one there. Let's see what you saw around here. By the way, make sure to hide your account number every time, okay? Just for the future, guys, if you're sharing your charts, hide your account numbers. I'm going to delete the screenshots you sent. You can send the second screenshot one more time without the account number. Now let's take a look at this. So NCLH, you trade. Okay, now this thing was a little bit late. Why is that? It already broke in the pre-market, right? And we don't like that. And now it's starting to wave down, right? You could see that it's making lower highs. That was a little bit risky, right? I see the 1 minute chart on what you saw right there. You like the hammer and it's coming back up, but overall it's just dropping down. That's a double top and it's breaking down. It was just a little bit too early for this thing to be traded. I was watching NCLH as well, but it wasn't perfect, especially when you're going literally into the face of the resistance. If you waited for the break, and then you could even tighten your stop loss after the break, because it could get momentum and could run after that. Awesome. So Noob, let's see what you traded. And when that's setup trading settings, lower rights, account allies, put. Yeah, guys, check what Chris sent. That's something you could use as well. Thanks, Chris. Yeah, guys, go to that settings, setups, and you can change the account allies. Now let's see this one. So look at this. This is exactly what we said we shouldn't have done, right? Because we could expect that this will happen. People see that, okay, this is a short squeeze and get that FOMO and then trade it to the long side, which actually wasn't long and then got stopped out. This short I personally wouldn't have done because this is a little bit too late. 1, 2, 3 consecutive 5-minute candles. We could expect that after this, there could be some sort of pullback. Now, today wasn't that kind of day. Today, stock actually sold off even way more. And I guess that was good for you. You could make money out of it. But if you do this consistently or on a consistent basis, you will lose more money than you make it. Okay. So on a third consecutive candle, just avoid it and wait for a reverse ABCD pattern if it's giving you that. If it's already so extended and did the average to range move without you, then just avoid it. Wait for a parabolic pullback and go for the opposite direction. That long was good. If that was a long, I think that was stop, right? Now this is 3-bar play. It's fine. I personally wouldn't have done it because it's against the 9 and the 5, and I have the rule which is telling me don't go against the 9 moving average on the 5-minute chart unless the 9 moving average on the 5-minute chart is your target. Now look at this. I guess your stop loss was really tight on these ones. That's why you over partial. But again, this is too much. I think in these type of charts, it's better to just do nothing. I know we'll miss some moves which were really good moves, but it's better to miss them rather than make money on them and then in the future lose some money in consistent basis. So OG traded PLTR. So you tried it in the pre-market to the long side, or this was hotkey testing? Anyway, this around here wasn't the best. Remember to say the last thing you are doing is checking the candles. Check the candlestick webinar. You see an ABCD pattern, but there is no candlestick confirmation. There is a reverse hammer around here, right? So you should just avoid taking it. At the market open, I'm not sure what that was. I guess you tried it for breakout and it got you stopped out. And then you tried it one more time for breakout. Like this second time is fine because at least on the second time you're having a bullish engulfing crack to the upside. But if I'm not wrong, PLTR, like most of the stocks, they are on a downtrend on the daily chart. So the best thing to do when you are seeing that the stocks are mostly on a downtrend, especially if you want to hold for trend, is to trade them to the downside when they are starting to go to the downside. Entry here was late, right? We don't go against the 9 moving average on the 5-minute chart. There was a decent parabolic reversal down here, and I think there it is, right? That was supposed to be the entry. If you're going against the trend, you need early entry so that you can target the 9, because the 9 is usually when the stock is making that reverse ABCD pattern before the trend continuation. Now, this is at least decent. Around here, you can see that, okay, we're changing the waves. There is a range at the down here consisting of 4 candles. We're taking it to the long side on a new high or small ABCD pattern on the 1-minute chart with a break of the range on the 5-minute chart. Stop loss in the middle, and that was nice patience. I love that. So let's check this one around here, AMD, and you traded AMD to the short side. Now look at this. The 60-minute chart is awesome, right? Clean reverse ABCD pattern with a fake breakout up there. On the 5-minute chart, we're starting with the short squeeze, and then we're breaking down. The entry is late. Best entry around here, 3-bar play. Remember, we discussed this in the candlestick webinar. This would have been the entry. That would have been the stop loss. This is the entry. This is the stop loss. So you're having a 3-bar play on the 5-minute chart, coinciding with the reverse ABCD pattern on the 5-minute chart, on the 1-minute chart. That would have been like the perfect entry you can get. Direction of the daily, direction of the 60, set up on the smaller time frame, candlestick pattern on the bigger time frame. All showed you short. So everything is perfect, just a little bit late, unfortunately. Amir, this is decent, exactly like we discussed. There is a range on the 5-minute chart. There is a break of the range. But the problem around here is that this is the third candle. If you could manage to get in on the second candle, having your stop loss in the middle, that would have been better. We don't want to enter on the third because stocks usually make pullback, and we don't know how big that pullback could be. It could retest literally before a continuation, and it could go a little bit into the middle before a continuation. So the setup and the thought process was really good. Just a little bit earlier entry would have been better. So remember this, if the stock is failing to break some level multiple times, it doesn't mean that this support is strong. The more it touches it, the more likely it is to break it. If touching it 1 time, 2 times, then yeah, okay, you can hold for a little bit more. 3 touches, then that's enough. You could go for a break after 3 touches, even before the break happens. Now, this is the first thing we're always saying, don't go to the long side against the 9 moving average in the 5-minute chart, because this is where stocks usually bounce off before making a reverse ABCD pattern. Then you took it to the long side, and I'm actually glad that this worked for you, but I personally wouldn't have done this, and I wouldn't have taken it to the long side. It could have just, again, did the same thing. Small pullback before a continuation. The short, though, was really good, but again, late, 3 candles. Try to aim for what? Second candle entry. This is our piercing line candle. Remember this? Bullish candle, and there is a candle which is piercing it, and then a new low. So that would have been your entry. Then there is another possible entry around here for 3-bar play, or here on the second candle. Then the third, that's already too much, and we avoid it. Then again, you're doing the same thing. You're taking it to the long side against the 9 EMA on the 5-minute chart. If you go against the 9 EMA on the 5-minute chart, that should be your target, because usually it bounces out of it before a continuation. Right, then again, same thing, but at least this time when you took it to the long side, the 9 was your target. So just remember this thing: don't go against the 9 EMA on the 5 unless it is your target. UAL, let's take a look at this thing. So daily is in a range, and I would expect it to be more strong on the daily rather than short, but since it's short on the daily, it could go down, it could go up, and as long as you're catching it earlier on the day, at least within the daily, you could profit within this intraday move right there. What happens at the open? At the open, we're chopping around, then we're breaking down, we're going for a retest, or sort of a retest, and you're taking to the short side. This is something I wouldn't have done. I wouldn't really short stock against a hammer on the 5-minute chart or on the 1-minute chart. The best thing or best entry around here would have been at the break of this. At the break of this. Why is that? Because this did a new high, and this is the first candle. This is not a 3-bar play because it's there was a hammer before it. If this was a doji, that would have been a perfect candle. If there was a shooting star, that would have been a perfect candle. Remember, candle confirmations. Last thing you're looking at before basing a decision is taking a look at the candles. So yeah, do you guys have any questions? Let's quickly see what the market is doing around here, and if there is anything which is setting up. TRIP is still chopping around, NIO is still chopping around. Now it's selling off. Like, you see this ugly price action. Now it's coming back up, giving us sort of an ascending triangle. Okay, we're breaking up. People taking it to the long side only to just sell off one more time. I hate that. This thing looks weak, like it's making a reverse BCG pattern, but again, it's after a hammer right there, so I don't like it much. If this 60-minute candle manages to close as a reverse hammer in like 20 minutes, and then it makes a new low, maybe. Excuse, not good. This is not good. Red's bad. Like literally nothing there, which is looking clean. For now, at least. This looks like it wants to sell off, but again, huge wick down here. With increasing volume of the low day. I'm not really sure if it's going to make it all the way down there. What do you say? SLGG might reverse? I can't really tell if it's going to reverse. This parabolic pullback, right? And after parabolic pullbacks, you want to see a double shape. The daily chart already did the average true range. And I think this is low float. They have their own rules. So be careful. Someone called the parabolic reversal here. Wait, is this a stock? Okay, this is not a parabolic reversal. 3-bar play and it's dropping down. I know that there is a level around here and there are triple hammers. This is not the best parabolic reversal because it's close to the 9. And stock could go just closer to the 9, bounce outfit, and then drop down. So maximum 63.40 and 63.40 isn't a good target. You're welcome, Danny. Earlier today, the earliest today, I would have been looking at parabolic reversal starting from here, like 9:55. Actually, 9:55 isn't so far. From 10, 10:05, and 10:10. Let's take a look between 10 to 10:10. Where are our opportunities to take this thing for a parabolic reversal? Lower lows and lower highs all the way down. Climactic volume at the low of the day. Inside bar candle, and a new high. That is the only place to catch it for a parabolic reversal. OG, it is recorded and it will be posted on YouTube. Once I'm done here, 10 minutes and it will be on YouTube. I was ending up the month green, red, something like that. But I wasn't making a living when I started. It was just slightly around break even. I don't really remember. I think there were weeks where I was green. There were weeks where I was red. There were weeks when I break even. Basically, not bad, not good. Sometimes down. But right now, every single week, at least so far, I managed to get up into green even by a little bit. Not every single week. There was a week in February where I ended up at break even. I mentioned it in Twitter. I had 2 max loss days. I think around 1 break even day and 2 small green days. So right, that will be it today. Thank you for sticking around, guys, and thank you for sharing your trades, all of them, winners and losers. Don't be shy of sharing your losing trades. It's totally fine. I shared with you my losing trades. Literally no winning trade today. 2 losing trades on X, which I don't know. I think the second one was fine. The first one I'm not really proud about. And 1 trade here, which was also bad. And I'm telling you, like, this was a bad trade. This is the first candle. This is the second. I shouldn't even have taken it around here. This was a bad setup. So we all are breaking our rules every now and then. Sometimes we notice that, sometimes we don't, but it's totally fine to have red trades, and we'll learn from reds sometimes even more than the winners. And that's it. Thank you, guys. Have a good day. Bye-bye.